Hey everybody, a lot of people have asked me for an update on Easterly Government Properties, ticker symbol DEA. It's one of the high dividend stocks that I really like the business. I talked about it a lot a couple years ago. It's been a little while. So people have been asking me for an update on it. The stock price is down considerably. So we're going to get into that. Before we do, check out the link you see on your screen, fool.com/Frankel. You can get 10 free stock picks right now from the Motley Fool. It is the best way to support this work I'm doing on YouTube. Again, fool.com/Frankel. And be sure to hit subscribe to my channel if you don't already. So, Easterly Government Properties, if you're not familiar, they are a real estate investment trust, or REIT, and they're unique in that they only have one tenant, and that is the U.S. government. Technically, it's a bunch of different government agencies, but really it's one tenant. The U.S. government occupies all of their properties. Now, the stock is down by about 50% since the start of 2022. Now, a lot of REITs are down since that period. I did another video about Realty Income, one of my favorite REITs, that's down 35% from the peak. So it's not they're not unique in that it's not performing that well, but that is a big downward move even for a real estate stock right now. The lazy explanation is its interest rates. I'm going to get into more or less lazy explanation in a minute. REITs are very rate sensitive, especially the ones that have really stable cash flows, like Easterly Government Properties does, because all of its money comes from the U.S. government. They're going to pay their rent. So stable cash flows. It trades more like a bond in the sense that yield and the yield kind of follows along the Treasury yields, and the stock price has an inverse relationship to that. So let me share my screen real quick. These are just a few slides from their latest presentation. We're going to talk about them. This first one, I know the print's small, so I'll read through them. Just to kind of give you an idea of where the portfolio stands right now and what this company has. There are currently 100 operating properties in the portfolio, is almost 10 million square feet. Great occupancy rate, 97.5% of the properties are occupied. About 10 years left on the average lease, which is a really good thing, and I'm going to tell you why that's a really good thing in a little while. And you can see it's very geographically diverse. Anywhere there's a need for government properties, they probably have one. You can see just some of the top tenants. I mentioned a bunch of different government tenants. VA outpatient facilities are a big component of theirs, more than a quarter of their portfolio. A lot of FBI regional headquarters are Easterly government owned. They built to suit some government space. They have lab properties. They have courthouses, warehouses. The DEA, which is where they get their ticker symbol from, DEA's regional headquarters is on there. So a lot of different types of government properties, kind of concentrated in the top few property types. So if we look down here, a couple more highlights I wanted to show everybody. So it's still growing. It's still making acquisitions. It grows both through acquisitions and by ground up development of properties. So it's acquired a few different types of properties in the past year. Homeland security properties, immigrations and customs properties, another VA property. That's the largest acquisition by square footage that it has bought recently. So it's still finding ways to grow. A lot of REITs are having trouble with that. All of its rent is inflation linked, which is definitely a good thing. You can see just an example from when inflation really popped up in 2021. You can see just how the inflation adjustments were made to the lease over time. So all of their leases are inflation protected and tax protected. You can see this bar here. As property taxes rise, the tenant has to pay more money, in this case the government. So really impressive really good properties, good tenant quality. It does have high barriers to entry. Most properties are mission critical and are needed, like VA health facilities. That's something you can't do remotely. But there are some concerns. One of my biggest concerns, I'm going to stop my share real quick. One of my biggest concerns is that a lot of government office properties are sitting empty right now. A lot of people are being allowed to work from home. there's a lot of pressure to downsize certain government agencies by the new administration. That is a big potential risk factor. The new administration, they're all about finding ways to make their government more efficient. Whatever you think about their politics, they definitely want to downsize the government a little bit. The saving grace is there are some properties that are needed. A lot of agency headquarters, for example, are part of Easterly Government's portfolio. But if 70% of government employees are working from home, that's not a great long-term catalyst unless, or not just working from home, but or not working in offices. That's not a great long-term tailwind. I mentioned there's over 10 years left on the average lease in Easterly Government's portfolio, and that is definitely helpful. It will prolong the bleeding, if you will, until, but occupancy could start to decline. And a lot of their properties could be difficult to release. So just to show you a couple of examples from that tenant list that I had up on the screen earlier, this keyword built to suit. If they have built to suit specialized government space, that makes up 13% of the portfolio. That would be really difficult to release. Some properties would be relatively easy to release if the government decided they didn't want to renew their leases. VA outpatient facilities, for example, could be released to just regular doctor's offices, things like that. There are some properties that could be released. Warehouse space could be released to any e-commerce business. But there's the DEA regional headquarters. If the government decided it didn't want 50% of that square footage, it would create kind of a tricky situation for this real estate company. So my general take is that the risk reward on Easterly Government properties looks good. I mentioned the stock's down 50%. It pays over a 9% dividend yield that's well covered by what it's earning. So there are downside risks other than just interest rates. If interest rates fall in 2025 and 2026, don't just expect this one to go straight up. It might not perform as well as certain other REITs until we get more clarity on the long-term health of the portfolio, how much government office space is needed, how much is going to be going away at the end of the leases. So that's really where this one stands right now. Leave me any questions you have. I'd love to know any specific questions you have on Easterly Government properties. But hopefully that did a good job of giving you an update, and thanks for watching. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investments. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market more than 5 times. Go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 914% as of January 7th, 2025, and are measured against the S&P 500 returns of 174% as of January 7th, 2025.